GM everyone, welcome back to another session of our tutorial. If you joined the previous class, we discussed the basis of candlesticks, how to read their body, how to read their shadows, which is known as wicks, and also what each color means. Okay, there are some different charts you open, you see blue and white, white and black, red and green, which I commonly like to use. Okay, so we also treated that in our last class. So today we will go a little bit deeper, learning candlestick pattern, that is identifying the uptrends and downtrend. Also we also take a look at understanding the doji pattern. Okay, this is a pattern where the market is in indecision state. You don't know, we can't decide if it's gonna go up or if it's gonna go down, but it is likely to reverse. It is likely to reverse when it occurs at support and resistance level. Okay, so today we are going to learn more about the candlesticks. We also identify uptrends, what we mean by uptrends, what we mean by downtrends, also understanding the doji pattern and interpreting multiple long-wick candles. Okay, all right, so for you, the exchange we are going to use during this tutorial is Kucoin exchange. Okay, and if you don't have an account, you can check into the bio of this. You can check into the bio of this project and join. Coming. So we'll go deeper, learn about candlestick pattern, also identify the uptrends and downtrends, understand the doji pattern, and interpreting the multiple long-wick candles. So I said let me drop in my comment section for those that will not be able to click the link. Okay, that is the link. If you okay, we are going to use Kucoin exchange. We are going to use Kucoin exchange. This is it. If you tap on that face link in the comment section, you sign up using Kucoin exchange, because that is the app you are going to use to interpret what you are learning today. Okay, so these are candlestick patterns. Is just like a candlestick pattern is just like a language of a country. For example, in Britain now they speak English. So imagine you are living in Britain and you don't know how to speak English, or you don't have anyone that interprets English to your local language. You know how weird it is. You don't even understand how things going on. That is exactly the same thing that is happening in trading, in crypto trading. If you are doing crypto trading and you don't understand the language, which are the candlestick patterns, this will be very, very difficult for you, because these are the building blocks of price action trading, especially when you trade futures. Okay, So if you don't have a Kucoin account yet, you can sign up with the link in the comment section and follow along. Okay. Okay, now let us dive into understanding the market trend. Okay, what is market trend? Market trend is basically defined as, the movement of the market. Is it going up or is it coming down? If it's going up, know that the market is trending upward. If it's going down, it's trending downward. Okay, so there's no big deal about that. We can check it here using Solana as an example. Using Solana as an example. Okay. It's not the one I want to use. When you come here, you click the. I hope you guys can see what I'm doing. When you come there, you click. Alright. This is what we mean by uptrend, for example. This is what we mean by uptrend, for example. This particular point is what we mean that the market is trading in an upward direction. Okay, so what is that? Fuck. Sorry for that. This 30-minute time frame. Where is it? I can't draw. Okay, this is a tool I was looking for. Alright. Yeah, we can say that. The market is trading in an upward direction. This is an uptrend. Okay, this is an uptrend. So before you start reading a candlestick pattern, you must first understand the market trend. Okay, before you start going to the candlestick, studying each of the candles. Okay, which how shall I place my trade? You must first of all know the market trend. Okay, so in crypto market, in crypto trading, we have 3 types of market trend. We have upward, we have downward trend, we have upward trend, and we have what? When the market is ranging, that is sideways or ranging market. Okay, and I'm going to show you each of these market trend in today's tutorial. Okay, so just stay with me. So now in the uptrend, we have the higher highs and the higher lows. That is, this shows that the buyers are totally in control. As you can see, the market was trading at minus 100 and was trading at 100 and 177,177 per token. So today the coin is currently trading at $200. You see, this was a massive uptrend, and I can also show you this same Solana when the market was trending downward. That is okay. Let me show you guys. Don't worry, I will still talk about trend line. So, but for now, let us understand the market trend first. Let me explain. This was the higher low. Higher low. Higher low. Higher low. This one is higher high. Another one here. Higher low. This one again. Creating higher high here. Okay, and it's coming down here again. And we also expect what? Another higher high somewhere here, if you keep watching the market. So that's what we mean by higher low and higher high. So now let's head over to, we are done with the uptrend. Now let me explain the downtrend to you. Let me explain. Okay, this is a very nice example. Are you seeing? Whereas for higher, for downward trend, we'll be having lower highs, and lower lows, signifying that the sellers are in the market. So we're going to touch different pairs, and you see the one that best fit for it. Okay, so maybe this is what I want to explain for you guys. Okay, as you can see here, lower high, lower low. Lower low, lower high, lower low. Okay, another lower high here. This one is red, and we have another one here. So this is example of a downtrend, showing you that the sellers are in control of the market. Okay, so now we have to look for when the market is in consolidation. That is, I'm looking for a ranging market so I can explain it. I'm looking for a nice ranging market to explain. Okay, I think this is it. This is a very nice example. All right, this is a very nice example of explaining what ranging market. A very nice example explaining ranging market. So what is ranging market? This is where the price of the market are being, in which the price is consolidating between support and resistance level. Okay, it's bouncing up and down. It has no direction. It has no direction on its own, and it also is not even in an uptrend or it's not even in a downtrend. So my advice to you trading ranging market is that you must be very, very careful. And sometimes I don't even advise anybody to trade when the market is consolidating. Wait for breakout before you enter the market. Okay, you wait for a breakout. So this is an example of a ranging market. The market is bouncing up and down. Okay, let me reply to you guys on live stream. I'm coming. Okay, that is it. So this is a ranging market. When the market is bouncing up and down, you literally don't know the direction. Okay, so that is it. This is a ranging market. As you can see, it was going up, it bounced here, let me delete that. See, it was here, it comes down, it goes up again, you can only draw up to 20 shapes. Which other shape do I draw? Alright, let me delete this so that I can explain things to you guys. At least I've explained the higher high and the higher low for you people. Okay, alright, this is it. So you see, it touches you again, come down again. So at this level, you can see you can say this is our this is our resistance. Okay, this is our resistance. And this is our support. And this is our support. Okay, so the market, it was, if you observe, it was in an uptrend. The market was in an uptrend, or all of a sudden it now experienced what? A ranging market. So you must be very, very careful. You must wait for breakout. This is it. The market, it was trending up, and it now enter what? The ranging market. So yeah, you must wait for a breakout, okay, before you do what? Before you enter any trade, because yeah, it's very, very risky. You might thinking it's coming down, this particular one, this particular line that is here, this particular line that is here, this is a support. This other line, I mean this line, you'll be thinking the market is going down, but all of a sudden it trends up again and you lose money. So this kind of market is good for professionals to, this kind of strategy, it is only the professional that can use it and succeed in it. So but if you are a newbie in trading, I will not advise you to use trade whenever the market is consolidating or ranging. Okay, so that is it. I've explained the market trend for you, the uptrend, the downtrend, and the ranging market. I told you that in the uptrend, bullish candles dominate. Green candles appears stronger and more frequent. In my own, green represents bullish, while red candle represents bearish. So if you check this one as example now, you observe that in this uptrend that I was drawing here, let me delete this, delete. I'm coming. Now you observe now. Oh my god, what is this? Oh, is it 16-minute time frame? Or is it 16 minutes or 30 minutes? Okay, this is it. Coming. Let me delete it so that I'll have opportunity to explain now. So in an uptrend, bullish candles dominate. That is the tendency of green candle to appear in the chart is more stronger and more frequent than the red candles. So if you check this chart now, you will observe that the green candles here, you can't compare it with the way reds are showing. Okay, that the market was in an uptrend. From uptrend, it now changed to ranging market. Okay, so that is it. So what are in in a nutshell, you can say that trend direction gives you context before acting on any single candlestick pattern. For example, now I know that this market is trending up now. There is no need. I need to know the market trend before thinking of any acting on any single candlestick pattern. Okay, I know we have a lot of them, and you can decide to use any one. You can decide to use any one you like, but it will be better if you understand the trend direction. Okay, so I'm going to talk about the Doji candlestick. Okay, the Doji candlestick. This is a Doji candlestick. Let us go to the trading Bible. But a Doji candlestick is that candlestick. The Doji candlestick is that candlestick that in which the close price and the open price are at the same time. So this is a point of indecision. Okay, you don't know if the market will pump up or is going to go down. You don't know. That's a state in which you are whenever you see a Doji candle, and it basically signify a trend reversal when it occurs at any key level. Okay, you will definitely have a trend reversal whenever, for example, if it occurs at support level, okay, in an uptrend and you see a Doji candle, there's a possibility that what will happen, the market will turn down. Okay, and if you also see it in a downtrend, and there's also a possibility that the market will go up. So that is, in a nutshell, that is just the meaning of a Doji candlestick pattern. Okay, so if you don't have this candlestick Bible, I advise you to download it and use it. So this is it. This is a candlestick Bible. I'm going to explain the Doji for you. Now, check it out. The Doji is one of the most important Japanese candlestick patterns. When this candlestick forms, it tells us that the market opens and closes at the same price. See what I was telling you guys, which means that there is equality and indecision between buyers and sellers. There is no one in control of the market. You get? There is no one in control of the market. You know what I mean, in control of the market? Remember, as we were explaining the uptrend, we know that the buyers are in control of the market. But explaining downtrend, we know that the sellers were in control of the market. But at this situation, you don't know if the buyers are in control or the sellers are in control. So this is a point of equality and indecision. Okay, equality and what? Indecision. So now this is the Doji candlestick. I believe you can see it well. This is the Doji candlestick. This is the highest price, this is the lowest price, this is the opening price, and this is the close price. The same time, the opening and the closing at the same time. So now look at what Trading Bible says. As you can see, the opening price is the same as the closing price. Would this signal means that the market did not decide which direction will take? But when this occurs in an uptrend or a downtrend, it indicates that the market is likely to reverse. Have you seen? This chart was trending upward, but all of a sudden there was a presence of a Doji candlesticks, and there was a trend reversal. Trend reversal means if the market was going up, it changes. Instead of going up, it will reverse back. Okay, so this is now, let's what they say. The chart above shows how the market changed direction after the formation of a doji candlestick. The market was trending up. That means that the buyers were in control of the market. That's right. The formation of the doji candlestick indicates that the buyers are unable to keep price higher, and sellers pushes price back to the opening price. This is a clear indication that a trend reversal is likely to happen. Remember, always a doji indicates equality and indecision in the market. You often find it during period of resting after big moves, higher or lower. When it is found at the bottom of the top of a trend, it is considered as a sign that the prior trend is losing its trend. So now let's go over to Kucoin and let us find out example of a doji candlestick. Okay, over to Kucoin. All right. This is a very nice bearish candle. When this one took place, 21 October. You want to explain doji candle with the opening price and the sell price are equal. You can see a lot of doji, but I'm looking for the one. If I see anyone, okay. All right. This is the example of a doji candlestick. This is example of a what? Of a doji candlestick. As you can see, the market was trending up. The market was trending up. Okay, but all of a sudden there was a formation of what? All of a sudden there was a formation of a doji candlestick that took place at the resistance level. This is the doji candlestick. That's a doji candlestick, and it is in red, blue direction. Now look at what happened to the market. It was going up, and if you have entered this trade, this would have been a mass profit because the market timed down from 253.5 to where? To $211.651. Okay, so you see that was a massive gain if you would have attempted to enter this trade. So that is one of the function of a what? Of a doji candlestick. You can find the other tokens. We also have a lot of them. You can find it with other tokens. This is a massive uptrend. This is a massive uptrend. I'm searching for another doji so that I can use that one to explain more. But I believe you should understand with that, only that one example, you should understand what's the main issue. I'm looking for it in a downtrend, that's why. Let's keep looking for it. Let's keep looking. Okay, is that not a Doji? No, that is not the one. That is not the Doji I'm looking for. It's very rare in Solana, so let's check another token. Let's check another token. Let's go to futures. Let's check out BTC. Okay, this is BTC. You click on those two candles there. Okay, this is BTC. I want to use it to explain Doji for you. If I'll be able to see any Doji that is formed at the support level, that is our aim. So if I should see it, I will definitely let you know. So that is it. Let's keep session. Let's keep session. Let's keep going. Have you seen another Doji? Have you seen another Doji? Have you seen another Doji? This is very massive. Check it out. This occur at S. Take my support. Take my resistance. And you see, and this is where the Doji took place. This is where the Doji took place. You see? Now take a look at the market. The market timed down from 100 from a 11,000 from 189,000. Is it 89,000? $118,484. The price turned down from there to $112,047. So with Doji, you need to, if you see it in if it is not in an uptrend or downtrend, there is no need for you to predict. Just wait for breakout. But if the Doji tends to occur at the resistance level or support level, just know that there will be a trend reversal. Okay, that there will be a trend reversal. So that's it. That's it for Doji. That's it for Doji candlestick. All right. So in our description, I say something concerning the multiple long wicks candle. Okay, I said something concerning the multiple wick candles. Now listen, these multiple long wick candles are very, very important in crypto trading. Okay, a long wick shows rejection, meaning price tested that level but failed to hold it. Okay, so if you see several long lower wicks near support level, is over a signal indicating what? Strong buying pressure. Okay, you be seeing small wicks, long lower wicks near support level. Just prepare your setup that the market is going to pump higher. Okay, but likewise, multiple long upper wicks near resistance level shows what? Selling pressure, that the sellers are what? Will soon take over of the market or be in control of the market. Okay, sellers are pushing back. So when these appear consecutively, it is a sign that the market is fighting for control. If you are buying, it will fight to go down. If you are selling, it will fight to go up. So that is what we mean by multiple long wick candle. So let me quickly explain that. Okay, for have you seen multiple long wicks? Let me look for it in the chart. Okay, that is not a long one. I'm coming. Okay, that's not it. Just bear with me, okay? I'll soon be there. Multiple long wicks. Multiple long wick near support level, near resistance level. That is what I'm searching for. Multiple long wick near the resistance level. Have you seen? That is not it. Have you seen? Now take a look at this one. I can decide to take my support, my resistance from here. Okay, this is it. That's my support, that's my resistance level. And I've seen this multiple wicks, long wicks. See, have you seen that? That is it. Now take a look. BT was $88,819. The price tamped down. Okay, price tamped down to where? 74,065, from 88,000 to 74,000. So this is one of the, of course you're not going to use only multiple wicks to execute your trade or to enter a trade. We just use other trading tools and strategies to make sure that you are confirmed that your entry, what you are about to do now in the market, is right. Okay, you can't just use only this one. You can combine it with RSI, with MACD, with some other candlestick pattern before you enter the market. Okay, so that is that for multiple wicks candle. Okay, you can read more about multiple wicks candle in the trading Bible. Okay, you can go through that and you really enjoy it. Okay, so today we have understood more about the candlesticks, the market trend, and the multiple long wick candle. Okay, I'll be waiting for your questions in the comment section. If you have any question, okay, I don't want this video to be too long. If you have any question, feel free to ask in the comment section. Okay, feel free to ask in the comment section, and don't forget to sign up using that link to Kucoin exchange. If you haven't done that, this is the time for you to do that. And also there's a campaign that is going on. Okay, if you have a live trading volume, you can also participate and earn massive reward. Okay, I've dropped the link in the comment section. And feel free to to go through it if you be able. And you must also follow the rules and regulations for you to be announced the winner of that campaign. Okay, so guys, I really appreciate your time. Thank you very much. We will continue from there. Okay, so thank you. No question, it's fine. Thank you very much, guys. All right, bye. Thank you very much for joining. Bye.